All right, everybody, ladies and gentlemen, hello and welcome to us here at Nadex. My name is Philip and I will be your presenter for today's webinar. Today it's the market movers for the 19th of February 2019. Guys, time really does fly. I just remember the year getting started and now, February is almost over. Just as always, if you have a look at your webinar interface, you can see that small questions box. And right now, I would appreciate a very short yes or why in that box to just let me know that the technicals have been sorted out, that you guys can hear me well, that everything's working perfectly, and it seems we're good. So thank you very much for that. And just a quick reminder for those who are not attending regularly, if you happen to have questions, please put those questions into the box. I'm here to answer your questions. You're not interrupting my flow. We're here to learn something together. And asking questions is really a vital part of the learning experience. Please don't be shy. That's a great opportunity. And so just ask questions. More than happy to answer those, or at least try my very best to do so. Today's webinar is scheduled to run for around about half an hour. And of course, before we get started, you can see already here those first risk disclaimers coming up. I have to make you aware of those. So please make sure you read through them carefully and you are comfortable with them before continuing with the webinar. Essentially, this says that trading, of course, involves risk, and you should understand the risk and the instruments you are using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. The examples are shown for educational purposes only, especially true for the major part of today's webinar. We will be looking at the markets together. 3 markets I think are rather interesting right now, tradable here at Nadex. However, it's just I want to show you what I see on those charts. In the end, you must own your trade. You must understand why you want to risk your money, why you want to put your money on the line, and just a random guy on the internet telling you that he likes or doesn't like a certain market should never ever be good enough for you to actually put on a trade. You must own that trade. You must have come for yourself to that conclusion. Yes, that is the trade that I want to have. So please make sure you're okay with this. And that being said, let's have a look at the Nadex risk disclaimer as well. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes including forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's have a look at today's agenda. You know me by now. I want to look at the charts. I want to have a plan. I want to have a strategy, and I want to execute that strategy. And the analysis techniques that I'm using are straightforward. Some like to call them simple. I like to call them robust. Always looking at the same things, looking for this. If you know how to set a trap in the woods when you're hunting game, you don't have to come up with new variations every single time. You just know what works and what doesn't work. And does this mean every time you put out that trap that you will catch your game? No. But ultimately, you will catch your game more often than not. It's the same thing with trading. I know what I'm looking for. I set my trap. I execute my trade. And once that trade is executed, it can either work or maybe it doesn't work. Perfectly fine. Both outcomes are absolutely viable and are likely to happen. However, looking at a large sample set of trades, I should be able to win my trades more often than not, to have more potentially profitable trades on my hands than losing trades. But I will never be able to do away with the losing trades. And the second component of having a positive expectancy when it comes to trading, my edge when it comes to trading, is on those potentially profitable trades. I want those to have larger profits than the losses that I will have to pay on the losing trades. Those two things coming together having more potentially profitable trades on my hands, and those being larger than the losses. This is how I make money, not with one trade, but with many trades. This is how trading works. At least this is how it works for me and my colleagues here at Trade with Position. So I want to have a strategy, and therefore I want to explain what I see on those charts according to our strategies. And yeah, please, by all means, if there are questions, if something is not clear, let us know. Now we're switching here to our charts, and I would like to kick it off today with the S&P 500. The S&P 500, large, huge market, and obviously we're looking here at a daily chart. Huge move to the upside, the markets got nervous, big drop, ultimately the markets caught up again, didn't work out, larger drop. On a higher time frame, we start to see the market made a lower low at that stage. Eyeballing just the daily chart, however, we have now been here in a very sweet and decent and consistent uptrend. What makes an uptrend? I can see price is making a high, it's pulling back to a low. I see this happen all the time. Markets never ever move in a straight line from A to B. It's always this push-pull, one step forward, two steps back, or just the other way around. And so price pulled back to form a low. And the only thing I as a trader have to note right now is this is a higher low compared to the previous one. And then price started to push higher again. And we started to make a new higher high. And so I'm seeing a series here of higher highs and higher lows. And this is what defines an uptrend. Simple as that. No need for any fancy indicators, no regression lines, not how steep that regression line actually is or anything like that. No, just eyeballing the highs and the lows, and I get higher highs and higher lows, and all those things make a nice uptrend. Next thing is I'm waiting for price to pull back to my price equilibrium levels. I'm not just because the market is in an uptrend. This is not good enough for me. I'm looking for a good buying opportunity. I'm looking for a good deal. I'm not willing to pay anything. I want to make a bargain. And the tool that helps me to identify this potential bargain here are my two moving averages, the 10 and 20. Price pushes away, it moves higher. But from time to time, price has to come back to catch its breath. One aspect of price behavior that pretty much everybody in the market is agreeing upon is that price is mean reverting. This is just a scientific fancy way to say price eventually will come back to its moving averages, or the moving averages will catch up. However, the distance between price and the moving averages will shrink down from time to time. And then it expands again, and then it comes back again, and so on. And so, is a good deal to be had here in this area? No, because we are overextended. Price has moved away a bit too far from those moving averages to give me my good deal. However, here price has pulled back. We're sitting now right in that sweet spot identified by the 10 and 20 period moving average. I'm getting a small bullish to indecisive candle setting up here, and this is good enough for me to speculate, all right, the momentum in the market might continue. And that's the big basic picture that I'm looking for here all over and over and over again. This is the daily chart, and the daily chart is in this uptrend. Now the question is, all right, this move might continue forever, or is there anything on that chart that shouts at me, wait a minute, things might not be there might be the first dark clouds on that beautiful blue sky. And the thing that I want to show you guys here is I'm having some, not so fancy indicators here on my chart. R1, P, S3, S2. What is that stuff? Those are good old conventional floor trader pivot points. Floor trader pivots, you can easily look them up on Google or Investopedia or anything, anywhere else. Simple as that. The nice thing about those pivot points are those are leading indicators, which means I can draw those lines. I can calculate the values in advance. They are not reacting. They are not lagging to what price action has been doing. They give me an idea about what the future might what might happen in the future. Never know for sure, no crystal ball, once again, but educated guesses, having more probabilities that something might happen instead of something else. And this is how I built my case for making potential trading decisions. What I'm seeing here, those long lines, those lines are monthly pivot points, which just means I took my pivot points, or I took price action of the previous month. So right now we are in February, and this means I just took the high, the low, and the close of January, put them into my formulas, or this is what the indicator package, and once again, this is nothing to buy. This is really straightforward, conventional indicators, nothing fancy, no money to spend, just reading price action. High, low, and close from January are being used to calculate those lines here. And this is the pivot point. This is the center price action, the center of gravity, if you would like to put it that way. And from there on, we have several other lines, resistance levels and support levels in the market. The formulas are well known. The trick here is just I use high, low, and close, not of yesterday, but of January. And this is what gives me those long lines. I can do this once again, but now I'm not using the data of January, but rather I'm using the trading data of last week. So those short lines that I'm seeing here are just the pivot points based on weekly price action. Yeah. And I was able to calculate those short lines Friday when the markets closed. This was good enough. The markets closed and I knew everything. I was able to draw those lines up front. Leading indicators, I have an idea about the future. The funny thing is that although those formulas are pretty much as old as trading in the pits, they work, they have some merit to it, people pay attention to them. Self-fulfilling prophecy, some might call it. I don't care. I know that price will react to those lines, or has a decent probability of reacting to those lines. Let's put it that way. The one thing that I'm always looking for my trades is I want to see that things indicate, point to the same price point. I want to have multiple reasons to take a trade. And what I'm seeing here is that this resistance 1 pivot point pretty much clusters very closely, not perfectly, but very closely here with the resistance 1 from the weekly. So the monthly and the weekly pivot points point to the same direction. And the funny thing is that if I draw my lines of support and resistance, and obviously this price level here, something like that, you see price has reacted here 3 times perfectly, no, but close enough. And this is also very close here now to my 2 pivot points clustering together. So I have the 100% retracement here, 100% from the low to the high. This move will pretty much be over. I have this level, price has reacted to this level here several times in the past. And now I have also setting up here my cluster of pivot points, resistance 1 levels. Is this tradable right now? No, it isn't, but this is good enough for me to think, wait a minute, if price starts to trade into this level, and guys, by the way, 2,800, big round number, psychological level, psychological importance, people will pay attention to this price level, all those things coming together here. So this whole area from 2,800 to let's say 2,815, all this looks to me, or appears for me to be a cluster of huge resistance that the market might be trading into. And for that reason, if price now gives me a buying opportunity, this is too close for me to consider taking that buying opportunity. On the other hand, if price trades into this level over those next few days, what I might be tempted to do is I could look at lower time frames, because I'm just making the case that we might face resistance here. And this would just mean, okay, if we're facing resistance, price will bounce off. How far? I don't know. But at first there will be there could be might be a negative reaction to this price level. And if I get on a smaller time frame, on a 15-minute chart, half an hour chart, 5-minute chart, something like that, if I get a potential nice short trading opportunity setting up there, this might be so interesting because I now have backed that whole scenario, that whole story that I want to tell with my trade setup. I've backed this here looking at the daily chart. The decision to place a trade, in the end, you should be able to tell a stringent story. You should be able to tell that story and convince somebody why this trade setup makes sense. What it is that you have noted that you're able to stack the odds in your favor. Multiple things coming together. Resistance 1 monthly, resistance 1 weekly, trading into this level. This level also happens to be the 100% pullback. All those things coming together. Let's build a case. Is this good enough? No, because the trend here is still an uptrend. However, on lower time frames, the trend might already then have shifted back to a downtrend, and this could then be a potential move there to the downside. Guys, does all this stuff make sense? Or in case I lost you somewhere, please let me know. We are running those sessions for you, so by all means, if something is not clear, don't be shy. Asking questions is perfectly fine. All right, so that's my big picture here, looking at the S&P 500. And guys, by the way, also, let's just see from here to there, how deep is this pullback? So I'm just grabbing my FIB retracements from here to there. All right, guys, this is also the 78.6% retracement here from the higher order. 78.6 is not good enough for me to justify this as a potential entry. The pullback is too deep for a huge trend continuation, a normal harmonic trend continuation here to the downside. If I was looking for potential short trading opportunity, I would have looked here between the 50 and 61.8% retracement area. 78.6, however, this is just another, that's the icing on the cake, so to say. It just puts, again, further significance to this potential price level here. And that price probably will not just move freely and just move and, just rally through that barrier like it wasn't there. I feel that we should see a lot of resistance between 2,800 and 2,850. All right, so that's the S&P 500. Next thing, I want to look at two more commodity markets here, at oil and at gold. So let's get started here with gold. Gold daily chart. And let's zoom out by quite a bit. And you might now be tempted to tell me, Philip, I can't see anything here in those levels, on that zoom level. You can see the big picture. Obviously, we can also switch here to a weekly chart and remove a little bit of noise here. What I like to do in those higher time frames, I like to use those to help me identify potential levels. You can see price has reacted to this level here in the past, closing counters there, and a reaction here, and again, and again, and again, and again. And now it appears the price has just pushed beyond this level. 1306. Let's just say, yeah, 1300, clearly an important level. Why? Once again, big round number. And drawing in those levels is really straightforward like that. I just pick that line and I can put it anywhere. And now I just grab my line and drag it down and try to see, do I find any area on my chart where that line actually, where it sticks. I throw it at the wall and looks where it's and try to identify where it sticks. So this here, 1380 might be another level, closing counters here, and definitely, and let's zoom in a little bit more here. I feel that here 1366 also might be interesting. Now that's the weekly chart. Let's drop down here once again to our daily chart. And you see the daily chart, beautiful uptrend, higher highs and higher lows. And an easy way to spot that the market is in uptrend was just by looking at my moving averages. The 10 is above the 20, above the 50, above the 200. The 200 is catching up momentum now. It's starting to inch slowly higher. And otherwise, I see my fanning pattern, the 10 clearly above the 20, pointing in the same direction. If I was to draw some vectors, some kind of arrows at the end of each of those lines, all those things coming together here. Now, the question is this now a buying opportunity? I don't think so. Because why? We are overextended. Price has pushed away from the moving averages and it's now moved away too far. Price is overextended, and remember, if price is overextended, what tends to happen next? Price starts to pull back. Or at least in this example here, price really didn't pull back that much. Instead, price started to move sideways. And sure enough, the moving averages have started to catch up. A little bit of warning sign here that the moving averages have closed down. However, then we got the breakout, and we can also start to see that this could have been tradable here potentially as some kind of momentum breakout strategy. We get the break, huge candle, not a perfect setup, but the momentum is there. Talk about momentum for a moment here. Price did make, and I'm trying to, yeah, here it is. Price did make a new higher high from here to there. What is it that MACD did make at that point in time? Well, MACD sorry guys. MACD did make a lower high. Same is true here, just eyeballing RSI. Same thing happened here. Lower high in RSI might be an indication that the market might be running out of a little bit of momentum here. Now, next thing, new higher high in price. This move is definitely not over, so it might be a little bit jumping the gun here to actually go in this direction. But here, once again, it might look like we are seeing another divergence setting up here right now. Not a fair call, because obviously I would like to see some kind of topping pattern here, some kind of smaller candles, bearish candles coming into play and indicating the market might be pulling back. So is there a lot of momentum in this market? No, momentum clearly has been lost. How can I see that the momentum has been lost? You see how steep that move up was here, how steep that move up was here. But however, in between, a lot of time was spent for the market to move sideways, and there this speed was lost. And this sideways phase here, this is what allowed MACD to actually draw and pull back all this way. And guys, I don't have to use MACD for that. Just eyeballing the 10 and 20 period moving average. What does it mean that MACD is pulling back? What is MACD doing for us? Well, MACD is nothing, and this is the standard box settings here with 12, 26 periods. This is nothing but a 12 period moving average and a 26 period moving average. And if the 10 and the 20 have closed down to pretty much close the gap here, sure enough, the 12 and 26 will also have to close down. I just have those indicators here because it's quicker, it's easier to see that I have divergence here than just by eyeballing everything here. But I hope you can see that all the information is here. This is not the magical MACD indicator. This is not the magical RSI indicator. Everything is here in price action. Indicators just help me to speed up my analysis, my scanning process. So trading into resistance 1 level here, if we happen to get some small bearish candle setting up here, I think we might be due for a pullback. Where might this pullback take us to? First obvious target would be to shoot for a FIB retracement here, round about this area here, 1320 to 1315, something in this area. And this also would happen to sit pretty much here on top of, if we say that it's not a perfect level by any means, but I'm pretty sure on lower time frames you will be able to identify something here. Once again, I made the case why I think the daily chart might be getting a little bit weaker at the point in time. Not suggesting that this move ultimately is over. I don't think so, because if we zoom out, the next big level of resistance here coming at 1360, 1366, something in this area. This is way more significant than what we're seeing here right now. But right now, I feel price has exhausted itself, might be setting up for a small pullback. How to trade that on lower time frames, 15-minute chart, 5-minute chart, half-hour chart, I might be able to identify a potential short setup following the same trading rules that I used to, or same analysis techniques that I used here on the daily chart. And that short setup on the 15-minute chart, for example, would be backed up by this overextension and potential correction here over those next few candles here on the daily chart. Try to get a feeling how those different time frames connect with each other. And you want to tell the same story on all different time frames. If I was now completely bullish here on the daily chart, it wouldn't make sense to look for a short trading opportunity on the 15-minute chart. But this potential exhaustion here, which might be inducing potential pullback, coming together with a short trading opportunity in lower time frames, this is what really, how to say that, that will really create that perfect story for the trading setup. If I'm really truly patient and look for the best buying and trading opportunity, I would wait for a potential pullback here. I would wait for the market to show me some signs of strength and then trade in the major direction of the trend, which is obviously here to the upside. So much for gold. And now I just have a few more minutes left for oil. So let's have a look at oil. Oil, big picture, huge sideways market, pretty much since forever. Let's put it that way. Range-bound market here since, let's say, 2014. And finally, we were able to break out of that move here, pushed much higher, traded back into the 70s. Market was not able to sustain all that. We established a beautiful move to the downside, beautiful downtrend. And now just recently, the market has started to push a little bit higher again. And the one thing to keep in mind is that we're looking here at this area of round about 55, 54, 80, something like this as a level. And now price has pushed a little bit higher. We have small divergence setting up here. And also here in RSI. RSI not so much. RSI could even be called a little bit converging. MACD a little bit on the weaker side. Is this the breakout that I'm looking for? Is this the move much higher here? Could be. On the other hand, price pulled back here almost or pretty much perfectly 100% here. For a true perfect breakout, I would like to have seen some compression here, which means I would like that this low here should have been a much higher low than that one here. Next thing, I would have liked to see a perfect level for the breakout. Didn't happen here. And the breakout here, yes, the candle is, it's mid-sized. It's not really large. It looks very bullish. No upper shadow, no lower shadow, pretty much nothing significant here. However, I would like to see a candle like that on the breakout here. I want that market to shout and scream at me, Philip, I'm moving higher. And this is just, yeah, we could be, let's have a look. Let's dip our toe into the water and see what the temperature is. And yeah, I don't see it. I don't feel it. A potential follow-up trading opportunity might be price pulling back to test this level here from the upside. And if I happen to get a perfect, beautiful setup there, that could convince me that the market could be going higher, then this might be something to look into. Right now, yes, we are almost there, but not quite. And what I'm seeing here is just looking a wee bit too weak for my taste to initiate any long positions here in crude oil. On the other hand, if we are back into the range, where is this range taking us, or where could this range be taking us? And once again, just this low, and here again, 42. That's roughly the range, and if price drops back into this range, I think everything until on the move to the downside here to 42 would be absolutely fair game for that. All right, guys, time is pretty much up already, so let's quickly jump back here to the last slide. I hope you enjoyed today's session. There was something new, there was something useful. If you have questions, by all means, let us know, not only now, but also different ways to be in touch with Nadex here also on that last slide. And yeah, I'm looking forward to welcoming you guys again over those next few weeks for our next upcoming webinars. And right now, thank you very much for tuning in. I wish you guys have all a very great day. Happy trading over those next few days, and catch you next time. Take care. Thanks again, and bye-bye.